What's up, everybody? This is Sunko, the Korean Bro. Today is 2022, September 13. Okay, let's look at articles. What do we have tonight? Wall Street points toward gains ahead of U.S. inflation report. Global stocks gain ahead of U.S. inflation report. Three value stocks for a volatile market. U.S. inflation falls for a second straight month on lower gas costs. U.S. inflation slows for a second straight month to a still high 8.3% over the past year. Volkswagen truck unit selling Russia business activities. Darden Restaurants takes the low road against inflation. Why these three stocks are off to a hot September starts. Inflation doesn't differentiate, but its impact does. Prepare for a record-setting quarter for cybersecurity stocks. Three low beta defensive stocks for a tough market. These are the only articles that I can pick right now. I know I've got another articles, but I might just go through the articles that I just picked right now. Okay. Wall Street points toward gains ahead of U.S. inflation report. Wall Street futures rose Tuesday ahead of new data expected to show that surging U.S. inflation continues to ease. Reducing pressure on the Fed to continue hiking interest rates. Before the opening bell, the benchmark S&P 500 index and the Dow Jones climbed 0.7%. Before markets open, the U.S. will release consumer prices for August that most economists expect to show the second consecutive month of declines. Inflation in July was 8.5%, which was down from a four-decade high of 9.1% in June. Economists polled by the data service FactSet Project Tuesday's report will show that price jumped 8.1%. Slowing inflation may allow the Federal Reserve to consider easing off the brakes. The Fed has raised its benchmark short-term interest rate 4 times this year. Global stocks gain ahead of U.S. inflation report. Global stocks and Wall Street futures were higher Tuesday ahead of data traders' hope will show that surging inflation eased in August, reducing pressure for most interest rate hikes. London and Frankfurt opened higher. Shanghai, Tokyo, and Hong Kong gained. Oil prices rose by more than $1 per barrel. Investors were waiting for U.S. government data. They hope will show inflation peaked at a four-decade high of 9.1% in June and has fallen further after declining to 8.5% in July. A decline might help the Federal Reserve avoid having to raise interest rates further to a level that might tip the U.S. economy into recession. The report will likely show pricing pressure relief, but will not change the fact from maintaining an aggressive stance. Okay. Three value stocks for a volatile market. What are they? Hewlett Packard Company, Dell, Seagate. Let's look at each. Value stocks can help preserve long-term capital, especially during times of volatility. And if the company produces relatively steady cash flow producing business with the stock trading at discount to metrics such as book value, but investors must be on the lookout for value traps. Value traps can occur if the long-term fundamentals of the company are poor and there is little chance of a turnaround. Despite the stock trading below metrics such as cash and assets, consider these three stocks if you are looking for long-term investments that will eventually overcome the current market volatility. HPQ, mm, Dell, and the last one is Seagate. Its current price is 68.77. First, your target estimate is not described at this point. We don't know how this price is going to be a year after, but we'll see. Mm. I know what Dell and Hewlett Packard companies are. We'll just look at Dell into detail, okay? Not Dell, like Seagate in detail. Here it says Seagate is another company that is down significantly during the recent correction. Okay. Mm. It once reached all the way up to 112.98, but it's down to 68.77, which is relatively low. The stock is down over 41% this year, right? The company is a major player in the HDD industry and is outperforming its main competitor, Western Digital, as it continues to bring to market more competitive enterprise class hardware to the market. Management has noted that supply chain disruptions have affected the business, but as the CEO states, it's all about the second half of the year, he noted, highlighting Seagate's own efforts to manage its supply chain. The back half will see the fruits of these efforts. We really look forward to that. Mm. Um, so they are pretty much like a major player in the HDD industry. Mm. And is outperforming its main competitor, Western Digital. Okay. What does this company do? Let's go to profile and see what this company does. Their full-time employees, 40,000. Industrial computer hardware technology. Its headquarters is located at Dublin. Mm. And here's the description. Provides a data storage technology solutions in Singapore, the United States, Netherlands, and internationally. Provides mass capacity storage products, including enterprise nearline hard disk drives, enterprise nearlines, solid state drives, enterprise nearline systems, videos, image HDDs. The company also offers legacy applications comprising mission critical HDDs and SSDs, external storage solutions, under the Seagate Ultra Touch. Hmm. So data storage technology solutions are what they provide. Hmm. Mm. I don't feel like they are the ones that I should put in my portfolio. I'm just gonna skip on this one. Let's go move on to next article. Okay. U.S. inflation falls for a second straight month on lower gas costs. Okay, let's see. Hmm. U.S. inflation falls for a second straight month on lower gas costs. Sharply lower prices for gas and cheaper used cars slowed U.S. inflation. Lower prices for gas and cheaper used cars slowed U.S. inflation in August for a second straight month, though many other items rose in price, indicating that inflation remains a heavy burden for American households. Mm. U.S. inflation falls for second straight month on lower gas costs. Sharply lower prices for gas and cheaper used cars slowed U.S. inflation in August for a second straight month, though many other items rose in price, indicating that inflation remains a heavy burden for American households. Okay, here's the point. Sharply lower prices for gas mhm, and cheaper used cars, but still inflation remains, right? Uh, Other items rose in price. Other items rose in price. Okay. Consumer prices surged 8.3% in August compared with a year earlier. The government said Tuesday, though still painfully high, that was down from an 8.5% jump in July and a four-decade high of 9.1% in June. On a monthly basis, prices rose 0.1% after a flat reading in July. Mhm. Excluding the volatile food and energy categories, so-called core prices jumped 0.6% from July to August, higher than many economists had expected, and a sign of inflation's persistence. Inflation remains far higher than many Americans have ever experienced and is keeping pressure on the Federal Reserve, the agency tasked with keeping prices stable. The Fed is expected to announce another big increase in its benchmark interest rate next week, which will lead to higher costs for many consumer and business loans. Okay. Inflation has escalated in families' grocery bills, rents, and utility costs, among other expenses, inflicting hardships on many households and deepening gloom about the economy despite strong job growth and low unemployment. Even if inflation peaks, mm, economics expect it could take 2 years or more to fall back to something close to the Fed's annual 2% target. Wow, wow, wow. 2 years or more. Here it says 2 years or more. So things are going to get worse. A lot worse than people might think. Or what I think. Okay. The cost of rental apartments and other services such as healthcare are likely to keep rising in the months ahead. Republicans have sought to make inflation a central issue in the midterm congressional elections. They blame President Joe Biden's $1.9 trillion stimulus package passed last year for much of the increase. Okay. Hmm. Why these three stocks are off to hot September starts. Snap stock bottom. Snap is a hot. It seems like Snap is a hot issue here. Snap is up 60% month to date and on track for its first 2 month winning streak of the year. The operator of the trendy Snapchat social media app released an investor update at the end of August that the market found to be better than feared amid fierce competition from TikTok and others. For the first 2 months of the time for for the first 2 months of the third quarter, Snap's revenue growth was reported to be up 8% year over year, despite the challenging macro backdrop and competitive pressures. This showed that Snap may not be done growing just yet, and that profitability may actually be attainable in the not so distant future. Management also outlined a plan to reduce costs by an annualized $500 million by cutting personal, fixed content, and other expenses. Meanwhile, Snap is leaning on innovation to drive better top line performances. Hmm. As its flagship product faces slowing growth in the US and soft adoption trends in international markets. Snapchat Plus, Spotlight, and Snap Map are slated to be new revenue contributors in the quarters ahead and help offset the anticipated pause in digital spending further down the road. A push into augmented reality is positioning the company for long-term growth. Augmented reality is indeed something that a lot of companies adopt these days. It's not only a specific company, but like Snap here. Uh, it once mm, deemed as a company that's in a downward trend, but now it's like it's now getting back up. Will they ever survive? Uh, Inflation doesn't differentiate, but its impact does. We've all heard the headlines of inflation hitting four-decade highs and its negative effect on operating margins and consumer spending. Inflationary pressures have caused raw materials prices to skyrocket, made worse rising logistics costs and supply chain disruptions. Soaring grocery and gas prices have soured consumer sentiment and spending habits. So inflation has caused a lot of effects on our life. Like we have to go to the grocery store to buy food, right? And its price went up mm, dramatically, and also we have to drive a car, right? Uh, it's 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 too expensive to it's really expensive to fuel the car, and mm, it also affects consumer spending, right? And operating margins of company, right? Okay. Logistic costs and supply chain disruptions. Okay, soaring grocery. Okay, to combat inflation, the Federal Reserve has made a full 180-degree hawkish turn from a year ago when they were overusing the term transient in a reference to inflation. Transient. They've accelerated to 75 basis point rate hikes to slow the rapid pace of inflation. They've accelerated to 75 basis point rate hikes to slow the rapid pace of inflation, which hit a 40-year high of 9.1% for June 2022. Inflation hits everyone, but not everyone is affected the same. This has caused a negative correlation within consumer spending. It is also causing divergence within industries and among peers. Rates rise, spending falls. Big and little box retailers, the have-nots. Hmm. While they turn their spending more towards necessities, they're also taking a hit on disposable income from the higher interest rates for credit card, loan, mortgage payments. The Fed rate hikes have slammed the U.S. equity markets down on the year, stoking a material change in consumer sentiment. Consumer discretionary items like apparel being passed over for consumer staples like eggs and vegetables. People reach for the necessities when time get tough. However, the impacts are affecting lower income households more than higher income households. Even higher income households are searching for bargains. This differentiation can also be found in the stock market. Okay, the point of this article is this: inflation happened, and it affects a lot of things in our lives, and inflation happened to everyone. It's the same to everyone, but then its impact is a bit different. Uh, because higher income family, higher income households, they still look for bargains, right? And but lower income households probably go through hard time. Uh, they're both affected, but higher income households are less affected. Hmm. Okay, next one we have is prepare for a record-setting quarter for cybersecurity stocks. Zscaler. 2 days ago we had like 20% up by Zscaler. Hmm. The internet security stocks have been in a deep correction all year because of fears of slowing growth, but still there's no sign of that yet. Results from a Checkpoint Software 2001 prove that demand for cybersecurity is not only still strong, but accelerating on many fronts. The latest news is from Zscaler, which offers cloud-based cybersecurity solution up to and including the enterprise level. The company just announced the top and bottom line beat increased its guidance, which is noteworthy, not only because the sector is set to outperform in the quarter third and quarter fourth reporting period, but because the entire sector has been lagging behind the S&P 500 since the pandemic bottom. That's silly. Cybersecurity stocks are as fundamental to the outlook of the internet and the digitization of business as any part of the IT picture. Demand is driven by widespread and growing need for safety. Driven by a widespread and growing need for safety. Each time the good guys make an advancement, the bad guys may want match. Okay. So the point is, uh, Zscaler, like cybersecurity stock, its value will go up because in the future, uh, nothing can compare, nothing can beat. Um, you know, like the statement at the end shows each time the good guys make an advancement, the bad guys may want to match. It's a good statement because each time the bad guys may want to match, the good guys make an advancement, and this good guy here is a Z-scaler, right? So bad guys will come up with something, and Z-scaler, like this company, will come up with something again to match that one. Hmm. And now let's go over to Yahoo Finance. Consumer prices unexpectedly rising now with inflation rise 8.3% over last year, 0.1% over last month. Raymond James says inflation may be easing, taps two stocks to buy. Get out of this distorted markets. Moment Allen just issued a dire warning to stock and bond investors. Elon Musk has a solution for the energy grid, and he is probably right. Stock futures fall after inflation data is higher than expected. A look at the startups Jeff Bezos has invested in this year. Most have this one thing in common. Lucy stock gets a new buy rating. Its berries are beating Teslas. Three cheap stocks for a potential recession, according to an analyst. Goldman Sachs is preparing layoffs. Tech isn't the only industry cutting jobs. Okay. The first article that I'm gonna read is Buffett survey shows investors fleeing equities MSA on fear of recession. Okay. Investors are fleeing equities MSA amid the specter of a recession, with allocations to stocks at record lows and cash exposure at all-time highs, a Bank of America Corp survey showed. Mhm. A historically high 52% of respondents said they are underweight equities, while 62% are overweight cash. According to the bank's Global Fund Manager survey, which included 212 participants with $616 billion under management in the week through September 8th. As concerns over the economy escalate, the number of investors expecting a recession has reached the highest since May 2020. Strategists led by Michael Hartnett wrote in a note on Tuesday, sentiment is super bearish, with the energy crisis further weighing on risk of appetite. He said a net 42% of global investors are underweight European equities. Hmm. The largest such position on record. The survey showed the market's green mood even before Tuesday's report on U.S. inflation, which ran hotter than estimates in August and cemented traders' bets on a 75 basis point rate hike by the Federal Reserve next week. U.S. stock futures fell on the news, with contracts on the S&P 500 dropping by more than 2%. Hmm. So the point is, mm, sentiment, consumer sentiment, uh, is bearish. Uh, is bearish. People expect to have a recession, uh, another big recession within 2 years. So they are like overweight on cash and they're underweight on assets. Uh, and it's an ongoing process, and it's gonna happen soon again too. So uh, people are adjusting their money. Raymond James says inflation may be easing. Top tap two stocks to buy. What are they? Hmm. Okay, here are some of the so-called billionaire statement, and they're all have something to do with either REITs or like holding company. Climate change. Heat, climate change, renewable power, and greed are all in the news. With record temperatures and wildfires in California threatening citizens with rolling blackouts, there's a lot going on and a lot for investors to consider. Tesla CEO Elon Musk tried to simplify things in a pair of power-related tweets this past week, saying the sun and wind plus battery storage is all the U.S. needs. Hmm. The primary solution to a sustainable energy future is solar wind with batteries for when the sun doesn't shine or wind doesn't blow, interconnected with conventional high voltage lines. Tweeted out Musk this past Thursday, no unknown technology is needed. Investors shouldn't be surprised that Musk favors renewable power and batteries. He founded Tesla to help put the world on a path toward the vision of a sustainable energy future. Tesla, of course, also sells solar roofs as well as residential and utility scale battery storage products. Hmm. So, the bottom line, hmm, investors are still figuring out the renewable power winners and losers. So, Tesla CEO Musk himself also was interested in renewable energy because um, no unknown technology is needed, is what he says. And as long as we have renewable energy, we got some sources to power mm, us, right? But since we have a limited energy at this point, its price goes up like continuously, and which causes the main problem. Okay, next one. Kathy Wassells says falling car prices could mean trouble. Goldman Sachs is preparing a layoffs. Tech isn't the only industry cutting jobs. It's putting together a plan to lay off employees, according to media reports, becoming one of the first major U.S. big banks to cut workers. The job cuts will affect employees across the company. Hmm. According to the New York Times and Bloomberg, which both cited people familiar with the plans. Okay, the last article that I'm going to read is about Bezos. Bezos also spent a lot of his money on investment, and people like myself, people will be curious as to what he invests in, right? Um, so, what is one thing in common? While the majority of Jeff Bezos' $150 billion wealth comes from his stake in Amazon.com Inc., his venture capital company, Bezos Expeditions, is also a contributing factor. In fact, since his retirement as the CEO of the world's largest e-commerce company, Bezos has been focusing on acquiring startups across different industries as his hunt for the next big bet continues. Hmm. From space to real estate, Bezos is seemingly dipping his toes in all types of water. Investments over the years. Okay, Bezos primarily invests through his Washington-based investment firms, Bezos Expeditions. The venture capital firm made several prudent investments in early and late-stage ventures since its inception in 2005. Apart from this, he also owns Nashville Holdings LLC, through which he bought the Washington Post in 2013. Unsurprisingly, Bezos was an angel investor in Google in 1998. his 250,000 is worth roughly $3.1 billion today. He also invested approximately $37 million in a ride sharing startup Uber in 2011 during a Series B seed funding round. The company has since grown to become a household name. Has reaped handsome returns for the billionaire. Bezos space startup Blue Origin made waves last year as one of the first companies to travel to the edge of the space, marking the first step toward commercializing space travel. Since its establishment in 2005, Bezos Expedition has invested in 96 companies while exiting 17 investments. So far this year, he invested in 9 startup companies. Overtime Sports. Overtime Sports is a media company that distributes content through popular social media outlets such as Facebook, YouTube. The startup has over 65 million social media followers, and its content has been streamed more than 2 billion times monthly. Given the company was founded only in 2016, it has charted an impressive growth trajectory in only 6 years. Bezos was one of the most prominent investors in Overtime during Series C funding, where he raised nearly $80 million. Okay. Reward. The NYC-based startup aims to simplify adulthood. The app-based platform is designed to assist the Gen Z population as they step into the real world in routine day-to-day tasks, catering to health, finance, or work. The platform had raised $3.4 million in 2021, including investment from Bezos Expeditions. By 2025, approximately 25% of the workforce will comprise Gen Z individuals. There's this list goes on and on and on. The majority of the startup Bezos has been investing lately cater to the Generation Z demographic. This generation heavily influences the future of modern society. With increased focus on digital media and sustainability, Bezos' latest investment captured key societal changes in recent years. So Bezos, unlike Warren Buffett, who invests his money in to sustainable uh, into company that has pricing power. He Jeff Bezos is more of a guy who is interested in Generation Z, because they're like the ones mm, they're like the ones who has the most influence in the future, right? So anyway, this is it for today. I'm gonna just sum it up today because I got something to do. And thanks, and see you tomorrow. Okay, bye bye.